Hi, I'm Jim Jubak, and welcome to my YouTube video for Wednesday, August 16th already? Katie, who does my persons the camera while I'm here, I was just talking about the fact that, start of school is just around the corner, and I was remembering how I used to dread these last days of August because I felt the summer slipping away. This year, for those of you who have not gleaned the clues, we have our own little late August deadline. My wife Marie and I are moving to Venice permanently, 3 to 5 years anyway, on the 29th. There may be a little raggedness to the transition, but they have the internet, I've heard tell, in Italy, and computers, although they can call them something different because they speak a different language, whatever that might be. Anyway, so we're getting excited. We've done one move, we're about to do a second one, and then followed by the third one. So if there's some glitches, it's all my fault. We'll do our best to minimize those. But other than that, business will continue as usual. Okay, if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're going to try to do the usual 3 a week. And we're going to try to do them from Italy, which will be very interesting because I will shoot them and then ship them to Katie, and she will edit them in Fairlawn, New Jersey, and we will be a multinational corporation, except we're not corporation. Anyway, if you want more of my stuff, you can go to my free site, that's jubakpicks.com, 3 portfolios, or my paid site, that's jubakam.com, that's 6 portfolios. And the special report that I'm in the process of trying to write as we sort through boxes is about global warming stocks, and that is gradually going up. So if you subscribe to my Jubak Picks site and you get my alerts, you should get an offer for a 20% discount for that. If not, just email us and we'll be glad to give you 20% off. Okay, so today we're going to talk about the dollar and currencies and the Fed. The title could be The Fed's Dollar Currency Ripples. Monday, the 14th, was a really extraordinary day in the currency market. We had China, Argentina, and Russia all in the currency headlines. We had a real strong down day for the yuan, where it fell to its lowest level against the dollar since November. It's now down 5% for 2023 to date. The Argentine peso collapsed. Argentina has been fighting a horrendous and largely losing war against inflation. So yesterday the government raised interest rates 21% to 118%. You try running an economy where money costs you 118% a year. Not easy. They devalued the peso by another 18%. What they've been trying to do is to keep the peso from collapsing, because the collapsed peso just sends inflation through the roof. There's a lot of stuff that's been imported, has to be imported at a higher price. This is all a result of a surprise victory in the primary for a libertarian candidate. Argentina is comfortable with its sort of vaguely leftist, Peronist governments over time. This guy's a libertarian, threatens to upset the apple cart, and the financial markets didn't like it. And Argentine debt due in 2046. Who would lend Argentina money for that period of time? I don't know. But anyway, it fell 4 cents to 28 cents on the dollar. That's where that is. And then there's Russia. Russia had an emergency rate increase of 350 basis points to a benchmark interest rate of 12%, not 118% as in Argentina, but hey, for an economy that produces as much in the way of oil as Russia, 12% is really pretty extraordinary. None of these 3 things are only about the dollar and the Fed. I mean, the Chinese economy is slowing. The Argentine economy is, as usual, in chaos. Russia is feeling the effects of the international sanctions because of the war in Ukraine. So there are all kinds of other reasons, but a big part of it is because the dollar is very, very popular. It's safe. The U.S. economy is showing surprising growth. Inflation seems to be coming down, although probably not. And expectations are the Fed will keep interest rates relatively high for a long time. So the dollar is very, very popular in currency markets, and it's having a spillover effect. And China, Argentina, and Russia are really only part of this very large iceberg. I worry about the developing economies because the IMF and the World Bank is saying that, hey, 40% of these countries are on the verge of default. So that won't make the overall global financial markets happy. So I watch my dollars and my cents, and my pesos, and my yuans, and my rubles, and my Zimbabwean dollars. Okay, so thanks very much for watching. If you like this, give us a heads up, thumbs up, not a heads up. This is a head, this is a thumb. If you like this video, give us a thumbs up. Subscribe to my YouTube channel. That way you get a notification when we do our next. We're doing about 3 a week. You can get more of my stuff on my free site. That's jubagpicks.com. Or subscribe and get 6 portfolios instead of 3, including some ETFs and currencies and commodities and options. And my paid site, that's jubagam.com. Thanks very much for watching.